Everybody, Stuart here from Hot Forex. It's Thursday, the 20th December. Markets are starting to thin down now. We've had the big major news of the Bank of England and earlier today the Bank of Japan as well. So we'll start with the yen here. That continue to strengthen against the US dollar. US dollar is relatively weak today, even against the pound, as we'll look at in a minute. Here we're down at S3 for yen. We're at 11.55 area. We've wrote about these a few times up on our TradingView page. Weakening down. So here in the 1 hour chart, we've got the daily chart. You can see there's big support at this 200 period here, which we're currently through at the moment. Obviously today isn't over, but 11.65 is the key 200-day moving average for dollar yen. So watch that one as we go into the final days of the year. Euro had a strong day today. We rallied up through 1400 here early on today. We've continued to rally. We stalled at R2 here at 1475 and rolled back over. But Euro's relatively bid against the weakening dollar following the Fed yesterday. So we're just right back into these fractions. So it needs to hold this 1435 area here on this 1 hour chart. Pound also moved up this morning. We had no change from the Bank of England, which wasn't any surprise. Unanimous votes. We'd rallied through 127 at one point before the news came out. News broke about 2 o'clock here on this time frame here. Back to R1 at 126.58. Big fat support during the day here at 126.44, where the 200 and the 20-day moving average period moving average are sat. If we go take this up to the daily time frame, you see the trend remains very much down. Resistance here at 127 needs to be broke if cable's going to start to turn over and close over its 20-day moving average on the daily time frame. The big mover is obviously been the stocks. Stocks fell again yesterday. The Nikkei closed down 3%, as we mentioned this morning. And again during the day, this is the 4 hour chart. This is this morning. This is the futures for the S&P 500 down through this key 2,500 level, and we're down again at the moment. Cash opens just opened fairly flat. So we're down. As we take this up to these higher time frames, you can see we've had this moving down in the daily time frame. The weekly, you can see big move down and under the 26, 28, 30 zone we were talking about as resistance on the weekly chart. But if we go even higher up to the top of them all, the top of the daddy, the monthly chart, you'll see what a big shakeout we've had in the last few weeks. It's grinding up, dip down, grinding up, then a month down, a bit of a retrace. For October, but no December. What a shocker it's been! Huge candle there. Obviously, still a week and a bit to go, but a big sell-off in this very weak fourth quarter for US stocks. So it's a very significant potential close to the end of the year for the US stock markets. All in, lots of them in bearish territory. Yesterday, only 22 of the S&P 500 stocks closed over their 200-day moving average, so it's a very bearish outlook for equities, and that's reflected really in the gold chart here today. We've been back through 1260. We haven't been up here for a long time. If I take this up to the weekly chart, I can't remember when we were last over here, all the way back here in June as we were coming down. So 1260 been spiked to today. So a strong gold, a weaker dollar as we roll into the end of the month. And oil continues to unwind. We're at 46.35 as our support today. Again, if we go up to the daily time frame, you can see big move down. S2 on the daily is 45.28, and S3 takes us down here to 44.28. So the trend remains very much to the downside for the oil market. That's all for now. Have a safe festive period, and I'll see you all again in the new year. Take care. Bye-bye.